Stop. Don't place another trade. Not until you hear this. There is a silent killer in your trading account. It's not the market makers. It's not the algorithms. It's not even your strategy. It is a biological glitch in your own brain that is hardwired to make you fail. You think you're losing because you haven't found the holy grail system yet. You think you're losing because the market is rigged against you. But the truth? You are likely sitting on a gold mine, and you are throwing it in the trash over and over again. You are quitting 3 feet from gold, not because you're weak, but because you are being tricked by the most powerful illusion in probability. Today, we are going to shatter that illusion. We are going to turn you from a gambler who panics into a casino owner who prints money. Welcome to the other side of variance. The grand illusion. Let's paint a picture. It's a Tuesday morning. You've got your coffee. You've spent the weekend backtesting a new strategy. It looks beautiful. The data says it has a 65% win rate. You feel confident. You feel ready. You take the first trade. Loss. Okay, no big deal. It happens. You take the second trade. Loss. Now your palms are sweating a little bit. You check your rules. Did you miss something? No, the setup was perfect. You take the third trade. Loss. Now, the panic sets in. The doubt whispers in your ear. This strategy is garbage. Your brain screams. You're an idiot for trusting it. Change it. Fix it. Run away. So you quit. You throw the strategy away and go looking for a new one. Here is the tragedy of that moment. You didn't just lose 3 trades. You might have just thrown away a $1 million career. Why? Because human beings are pattern recognition machines. For 200,000 years, if our ancestors saw a rustle in the grass 3 times, and 3 times it was a lion, the guy who ran away survived. The guy who waited for more data got eaten. Your brain is built for survival, not for statistics. Your brain sees 3 losses and screams, danger. But the market is not the savannah. The market is a game of mathematics, and your survival instinct is the very thing getting you killed. You are suffering from the small sample size delusion. You are judging a marathon based on the first 10 steps. You are judging a movie by the opening credits. And because of this, you are trapped in a cycle of doom, strategy hopping, endless tweaking, and perpetual failure. The casino mindset. I want you to mentally leave your trading desk for a second. I want you to imagine you own a massive casino in Las Vegas. You own the roulette table. Mathematically, the house has an edge. Over time, the casino always wins. That is a fact. Now, imagine a guy walks in, puts $1,000 on red, and wins. Does the casino manager run down to the floor screaming? Does he call a board meeting? Does he check the wheel to see if it's broken? No, the guy bets again. He wins again, he bets a 3rd time. He wins a 3rd time. The player is now up $3,000. He is on a winning streak. Does the casino panic? No. The casino pours him a free drink. Why? Because the casino understands something that most traders never learn. They understand the law of large numbers. The casino doesn't care about 3 spins of the wheel. They don't care about 10 spins. They don't even care about 100 spins. They care about 1 million spins. They know that in a sample size of 5 spins, the player might win. But in a sample size of 1 million spins, the math will grind that player into dust. The edge always reveals itself over time. But you are acting like the player, not the casino. When you trade, you are obsessed with the outcome of right now. You need the next trade to work. You need the next 5 trades to prove you're smart. If the casino manager acted like you, he would close the roulette table every time a player won 2 hands in a row. He would say, "Oh no, the wheel is broken. The strategy isn't working," and he would go out of business in a week. You need to stop thinking like a gambler trying to get lucky, and start thinking like the house. The house expects to lose hands. The house plans to lose hands. The house knows that losing hands are just the cost of goods sold in the business of winning. The math of chaos, variance. Let's look at the cold, hard math. This is where the magic happens. Let's say you have a strategy that is genuinely profitable. Let's say it wins 60% of the time. In the world of trading, a 60% win rate with a good risk-to-reward ratio is like printing money. It's elite. So, you have a 60% edge. That means if you take 100 trades, you should win 60 and lose 40. Simple, right? Wrong. That is the destination, but the journey is messy. This is called variance. In a random distribution of data, 60% doesn't mean win, loss, win, win, loss. It means you could have 10 wins in AROW. It also means, and listen to me closely, you could have 6, 7, or even 8 losses in a row. Yes. A winning strategy that makes millions of dollars over the long run is mathematically guaranteed to have losing streaks that make you want to vomit. If you take 100 traders and give them all the exact same profitable strategy, here is what happens. Trader A starts with 5 wins. He thinks he's a god. He doubles his risk. Trader B starts with 5 losses. He thinks the system is a scam. He quits. Both traders had the same system. Both traders had the same math. Trader A failed because he got arrogant due to positive variance. Trader B failed because he got scared due to negative variance. Neither of them let the math play out. They got fooled by the noise. Think of it like the weather. If it rains for 3 days in July, do you assume summer is cancelled? Do you assume the seasons have broken? No. You know it's just a storm. You know the sun is coming back because that's how the climate works. Trading losses are just rain. If you have a good strategy, the sun is mathematically guaranteed to come out. But most of you are selling your house and moving to a cave the moment the first drop of rain hits your windshield. The great filter. I call this the great filter. The market is designed to filter out the weak. It is designed to take money from the impatient and give it to the patient. When you start a new strategy, you are entering the fog of war. The first 20 or 30 trades tell you absolutely nothing about the strategy's viability. Did you hear that? The first 30 trades tell you nothing. If you win 80% of your first 20 trades, it might just be luck. That if you lose 80% of your first 20 trades, it might just be bad luck. But here is what those first 30 trades do tell you. They tell you who you are. This is the test. The market is hazing you. It is poking you in the chest, stealing your lunch money, and asking, are you going to cry? Are you going to run away? Or are you going to stand there, execute your rules, and wait for the law of large numbers to kick in? Most people fail this test. They want the reward without the risk. They want the certainty of a paycheck without the uncertainty of an entrepreneur. Trading is not a job where you get paid for your time. You get paid for your conviction. You get paid for your ability to walk through the fire of a losing streak without flinching. If you change your strategy every time you hit a drawdown, you are essentially restarting the game at level 1 every single week. You never get to the boss level. You never get to the treasure. You are trapped in the tutorial over and over again. Imagine a pilot flying through turbulence. The plane is shaking. Coffee is spilling. Does the pilot turn off the engines? Does he assume the laws of aerodynamics have stopped working? No. He trusts the machine. He trusts the physics. Your strategy is the machine. The variance is the turbulence. If you turn off the engines in the middle of a storm, you crash. The only way out is through the 100 trade protocol. So, how do we fix this? How do we rewire a brain that is scared of losses? We stop trading for money. We start trading for data. I want to introduce you to a concept I call the 100 trade protocol. From this day forward, you are not allowed to judge a strategy, you are not allowed to tweak a rule, and you are certainly not allowed to quit until you have executed 100 trades exactly according to the plan. Why 100? Because at 100 trades, the noise cancels out, T100 trades, luck fades away and skill remains, T100 trades, the casino edge becomes visible. Here is the secret that will change your life. When you commit to 100 trades, the pressure vanishes. If you are judging yourself on every single trade, every loss feels like a knife in the gut. Every loss feels like a personal failure. But if you are judging yourself on a bundle of 100 trades, one loss is nothing. It's just 1% of the data. It's a statistic. It's a brick in the wall. When you hit a losing streak of 4 trades, you don't panic. You look at your spreadsheet and say, Okay, that's trades 12 through 16. I still have 84 trades to go. Let's see what happens. This grants you the superpower of detachment. You stop looking at your P&L, profit and loss, every 5 minutes. You stop calculating how much money you could have made. You become a scientist running an experiment. Did I follow the plan? Yes. Did I lose money? Yes. Good job. Next trade. That is how a professional talks to themselves. A professional separates the execution from the result. You can make a terrible decision and win money, that's luck. You can make a perfect decision and lose money, that's variance. Over a small sample, results lie. Over a large sample, results tell the truth. Your job is to survive long enough to hear the truth. Surviving the storm. Risk management. Now, there is one catch. You can't survive 100 trades if you blow up your account on trade number 12. This is where risk management stops being boring advice and becomes your life vest. If you know that a good strategy will have a losing streak of 5, 6, or 7 trades, you cannot risk 5% of your account on one trade. If you do, that losing streak will wipe out 35% of your capital. You will be emotionally destroyed. You will quit before the math turns in your favor. To survive the law of large numbers, you must bet small enough to stay in the game. Think about the casino again. The casino has millions of dollars in the vault. But the maximum bet at the blackjack table is capped. Why? Because they know that if a whale comes in and gets lucky on one hand for $10 million, it could bankrupt the house. Even the casino manages risk. You need to trade small enough that a loss is boring. If you sweat when the trade goes against you, you are trading too big. If your heart races, you are trading too big. You need to be sized so that you can take 10 losses in a row and still show up on Monday morning ready to execute trade number 11. That is the price of admission to the 100 trade protocol. You buy your ticket with risk management. You take the ride with patience. The conclusion/outro. Listen to me. The holy grail you are looking for is not an indicator. It is not a discord signal. It is not a secret pattern. The holy grail is endurance. The winners in this game are not the smartest. They are not the ones with the fastest computers. They are the ones who can get punched in the face by variance and not blink. They are the ones who understand that a losing streak is not a stop sign, it is a speed bump. You have a choice today. You can keep being the gambler. You can keep looking for the magic trick that never loses. You can keep quitting every time it rains. And you will stay exactly where you are, frustrated, broke, and wondering why. Or, you can become the house. You can embrace the math. You can accept that losing is part of winning. You can commit to the long game. Stop looking at the last trade. Start looking at the next 100. Trust your edge. Trust the math. And most importantly, trust yourself to handle the storm. The probability is on your side. But only if you stay in the game long enough to let it work. Don't quit. Don't fold. Keep flipping the coin. I'll see you on the next trade.